Sandeep, should one sell anything at all? Because every time you're selling, you're regretting.
Yeah, so I think you need to identify sectors which you think would have reached valuations which are completely unsustainable. So, like we got out of railway stocks when we thought the valuations were unsustainable. We got out of Tata Motors and a few stocks here and there. But I think, like I've said often, that we keep 12 to 15% as cash to take care of opportunities when they present. But we are still not in a zone which we can call it's a huge significant bubble, which when it bursts, the markets will fall 20-30%. I still don't think that's going to happen. So to that extent, I'm not looking at increasing the cash holdings right now.
Markets may not fall 10-15%. I mean, what is the thought behind it?
So the thought is that one, on pure valuation, we are still not on bubble territory. Secondly, the key parameters the biggest parameter which is required for a big top in the market to be made is that inflation is very high. And that high inflation leads central bankers to actually increase rates, and then the entire scenario becomes unsustainable, or there is some sort of crisis in the financial system. So both these parameters seem to be missing, or at least not visible at this stage. So I think that's the reason I don't think that we will have the kind of fall which we see after a market bubble is made. But the negative factor obviously going on is the extreme speculative activity on smaller stocks, like SME stocks trade at valuations which are higher than large cap stocks. Like the BSE SME index is twice the valuation of the main board small cap index, etc. So speculative activity is very high, supply is very high. So those are the negative factors which could potentially slow down the market or create some correction.
So Sandeep, just like we spoke about defense, we can talk about shipyards. You spoke about railways. We've been maintaining a view on channel also that look, these are businesses which will continue to grow, but these are businesses where margins are not wow, and 70-80 P multiples for companies where returns are 14-15%, they are not going to sustain. And stocks have gone down. Where else are you finding this kind of a misbalance where P multiples have become out of whack and the underlying business is not going to be that great which would justify stretched valuations?
The speculative activity largely was one in smaller stocks. So there'll be many small sized mid cap companies which still have very high valuations. And I think it could also be in segments like renewable energy, where if you look at the solar or solar related companies, their valuations are too high, given the fact that if you see on a daily basis, you see companies announcing capacity addition, etc. The capacity addition in the solar cell as well as panel manufacturing is going to be so huge over the next 1 or 2 years that we are going to go into an oversupply situation. So I think that excitement will get moderated eventually. So I think that's one segment which clearly comes to mind where people should be careful.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.